Hey everyone, and welcome. You know that feeling, right? The market's flashing red and the pressure is on. But what if you could turn a day of crazy volatility into a moment of total clarity? Well, that's exactly what we're going to do in this explainer. Build a calm, data-driven playbook for the next time the market gets choppy. So here's the billion-dollar question, isn't it? When everything starts dropping, what are you supposed to do right now? It's that gut punch feeling that you've got to do something and do it fast. So let's just cut right to the chase. Okay, so here it is, no fluff. The answer is twofold. First, and this is the big one, don't touch your long-term core investments. Just don't. And second, keep a close eye on the energy sector. There might be a short-term play there given what's going on. Now, let's spend the rest of our time breaking down exactly why that is the smart move.
All right, so let's get into it. To really understand the why, we have to pull back the curtain and dissect what actually hit the market today. And it wasn't just one thing. It was what I'm calling a triple whammy of bad news.
Okay, first piece of the puzzle, the Fed. The minutes from their last meeting dropped, and some members hinted that more rate hikes could be on the table if inflation doesn't behave. Basically, they sounded a little tougher than anyone was expecting, and that spooked the market. That's headwind number one.
Next up, we got some news from Walmart. Their earnings were fine, but their forecast for the next year was, well, let's just say, super cautious. And look, when a giant like Walmart, a company that basically has its finger on the pulse of the whole economy, gets nervous, it sends these little shockwaves everywhere. And to top it all off, the third part of this triple whammy, growing geopolitical risk. You hear about increased military tension in the Persian Gulf, and your brain immediately jumps to one thing: oil. And what could happen to the global oil supply? That just threw a huge dose of uncertainty into the mix.
So what was the damage? Well, you can see it right here. All the major indexes took a hit. But forget those numbers for a second. Look at the VIX index. This thing is literally called the fear index for a reason. It jumped over 3% and, this is the key part, it crossed that magic number of 20. When it's above 20, it means anxiety is officially running high.
Okay, but this is where things get really interesting. Because if you only read the scary headlines, you'd be running for the hills. But underneath all that noise, the actual data, it's telling a totally different and much more nuanced story. And this right here is the perfect example of that. It's the headlines versus the real data. On one hand, you have the fear. The VIX is high. The Fed sounds tough. But on the other hand, the 10-year bond yield is actually falling. What does that mean? It means the big, sophisticated investors are piling into long-term bonds, basically betting that the Fed isn't going to go crazy with rate hikes. Plus, the job market is still looking super strong.
And speaking of that strong job market, just look at this number. New jobless claims came in at only 206,000. The experts were expecting way more. This is not what a collapsing economy looks like, folks. This is a solid foundation that can absorb a lot of negative news.
We're also seeing this panic in certain pockets of the market, right? Like software as a service stocks, or SaaS. The story going around is that everyone's pouring money into AI, so all these other software companies are getting left behind. And yeah, that shift is happening, but analysts at places like JP Morgan are basically saying, whoa, hold on, this sell-off is a huge overreaction. For anyone with a long-term view, this could actually be a big opportunity. Okay, so we've got fear on one side and some pretty solid underlying strength on the other. What in the world do you do with that? How do we turn all this analysis into an actual plan? Well, let's break it down into 5 simple steps.
This is it. This is your playbook for a day like today. Number 1, and I'll say it again, do not sell your core positions. Number 2, just wait, be patient. There's huge data coming out tomorrow. 3, keep an eye on energy because of all that geopolitical stuff. 4, look at this dip in tech and size as a potential long-term opportunity, not a disaster. And number 5, the golden rule, always, don't let your emotions drive the bus.
So let's just double-click on that first step, because it's so important. What are core positions? Think of them as the bedrock of your portfolio. The companies, the funds that you truly believe in for the next 5, 10, 20 years. A single bad day full of short-term panic is not a good reason to ditch your entire long-term game plan.
And why is step 2, just wait, so critical right now? This is why. Tomorrow we're getting 2 absolute bombshells of data. The PCE inflation report, that's the one the Fed really cares about, and the latest GDP numbers. Making a huge move today, it's like going all in on a poker hand right before the last card is turned over. It just doesn't make sense. We're going to get so much more clarity in just 24 hours.
And all of this really brings us to the final and honestly, the most important point of all. Because navigating a choppy market isn't just about spreadsheets and data. It's about psychology. It's really a battle that's happening right inside your own head.
You know, psychologists have a name for this. They call it System 1 versus System 2 thinking. System 1, that's your gut. It's fast, it's emotional, it's that little voice screaming, sell everything, get out now. But System 2, that's the slow, logical, analytical part of your brain. That's the part that says, hang on a second, let's review the data. What are the bond yields doing? What about those jobless claims? The whole point of today is to give your System 2 the ammo it needs to win that fight.
So I'm going to leave you with this one simple question. The next time the market gets crazy, and trust me, it will, just take a breath and ask yourself, is this feeling, this urge to act right now, coming from my fast, emotional brain or my slow, analytical brain? Because mastering that one little pause, that's the secret. That's how you turn scary volatility from a threat into a real opportunity. Thanks for tuning in.